Okay, so we got the macro closures, and I see a massive setup happening here for VOCL that we must talk about. Okay, team, so let's go ahead and get this started now. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with the VOCL technicals, raw price action, and statistical threat of analysis on this Sunday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, team, so what we're looking at here on the weekly chart of VOCL is actually a falling wedge, and that is a buy formation setup here. What we're looking at is a broadening descending wedge on a macro scale, and within that broadening wedge, there is a falling wedge, both of which are actually, I mean, this is a smaller time frame setup, but it absolutely is still in a macro time frame. I mean, this was here February 2021, right? And it's been in the making, right? And this back here is actually 20. Wait, I'm sorry. Where was this? This is 2023 February, and this is right back here 2022 January. Okay, so yeah, it's been about a year in the making, right? So this is absolutely nice, and I'm going to explain to you why. Okay, please notice here that this was the prior week's weekly close, right? This is the one that we just closed this Friday. Okay, so we closed this with an opening value of about 4.02, right? 4 cents. And you can see that the price action ended up closing at 4.45, indicating that there's still demand for the asset, right? So as it's closing above this. So this would be a confirmation for a continuation to the upside if it's playing by the traditional rules, right? So this would be essentially that moment of a reversal happening here, okay? Which is very curious because we're already at we're at the apex of the triangle here, so this thing could be ready for breaking out just at any moment, right? So I mean, we're very close to that resistance too. Okay, so there are a few things that I would like to talk to you about within this, okay? Because it's very curious that, first of all, yes, we have acquired the apex of the triangle. Another thing is that we already have met the golden rule of three tests of the resistance from the macro scale, broadening descending wedge, which usually indicates, 3 tests of the resistance, capitulation, reaccumulation, and a true breakout test of number 4 to follow, right? So we definitely got that capitulation, and it now looks like we're starting to consolidate here, right? So that's a very good thing. Now let's go ahead and touch on the statistics, because this is where it starts getting really curious. Okay, so what you're looking at here is a 6-hour volatility versus momentum backtest. Okay, so the condition or the context behind this, or the criteria, is that any time that volatility has contracted to critical levels, which could be within the 15 percentile, this neon green line, and started an expansion phase towards the upside with an upside pivot and beyond the 15 percentile, that paired with stochastic momentum with an upside pivot has led to about a 91.78% move to the upside. Okay, so what I want you to see here is that throughout the entire trading history is what I've taken note of. Okay, so this is what you're looking at here. These are all of my notes here. Every single individual one right here I've taken into account any time that condition has met, right? So the data, that's the sample set, and now the data set that came out of that is actually this right over here, right? So you're looking at a total of 65 iterations throughout the entire trading history of the VOCL asset on the 6-hour time frame, 47 of which were guessed correctly to the upside, giving us an averaged upside accuracy of about 72.31% with a mean of about 91.78% over the span of about 9 days. This is proof of work. Now, I did calculate the standard deviation from this move, and that 91.78 mean actually has a standard deviation of about 293.10%, with an upper bound of the first standard deviation being at 384.86. So 293% is actually laying within 68% of the results. If you're familiar with the bell curve, right, of statistics, sorry that it doesn't look so good here, but yeah, within 68%, which is this bound here, you're actually looking at about 293% to the upside, right? Anywhere within these results here can be viable, right? So it's not saying that we're gonna go 293%. It's just saying that there has been a standard deviation of 293% to take into account. 68% 90% of the time, which means that we have targets literally from where we are right now to 293.10% to keep in mind. The upper bound of the first standard deviation, of course, it's laying right here in the upper bound of about 384% to the upside. So this is where it gets curious. Check this out. So if we come back here and we start measuring, please remember that the mean we're looking at is 91.78. And the standard deviation 293, right? Take a look at this. Taking a trend line, remember that there are 3 zones to look at here for the psychological play. I'm talking about the falling wedge, okay? So first of all, you want to take a trend line from, of course, the breaking point here, right? So that would be your bull set number 1, right? So you'll take a trend line from the top side of the triangle to the very bottom side of the triangle, apply it to that supposed area of breakout, which could be right about here, right? And that takes us to a target of about 606. Great. Okay, but that's not what I'm talking about. What I want to show you here is that if you take a trend line from the center of the triangle, all the way to the bottom side of the triangle, right? This is the end of it here. So you can see that this is pretty much halfway there, okay? You apply this to that supposed area of breakout, and it takes you to where? It takes you to a target of, let's just highlight it right here, and it takes you to about 842, right? So let me just kind of hover over it. Yeah, about 842, 845, which is where? If you measure from that breakout to this point here, you're getting 91.65% to the upside. The 6-hour volatility versus momentum is telling us 91.78%. Very, very curious that we're getting a super close target just based on psychology. Look at this now. If we take a trend line from the top side of the triangle all the way to the bottom side of the triangle and apply it to that same breakout point, that takes us to what target are we looking at? We are looking at 1677, aka 280.35% to the upside, of which what did we say? 293.10% on a standard deviation, 68% of the results. Yeah, that's pretty cool. All right, so that setup is actually, if I can be very honest with you and very transparent, that setup has already fired. It's set up, let's see, it actually fired, let's see. I'm going to be very, very transparent here with you, okay? So I would honestly say that it actually, it could have been, let me see. Yeah, I would say that it fired right over here on this red candle, which would actually be, it actually fired at 431 and we're sitting at 445. So yeah, it's just, that it's very interesting that it would measure those targets. So yeah, it literally just fired on Friday. Okay, so this, and to be honest with you too, I actually tried to long this, but I did mention to someone that I was probably a bit early on it, and I did also say that there's a setup coming up, and it's not quite there yet, but it's in the process of it. So I actually triggered a little too early, right? And I got stopped out in this capitulation here, which essentially pressured the stochastic momentum to all the way to the downside, and then when it recovered here, it actually pressured stochastics to the upside, thus firing the signal with an increase of volatility. So that's very good. Now, one more thing that we have to keep in mind here: there is actually a key component here that is not meeting the criteria that we need, and that would be DMI. So directional movement index is actually something that I look for validation of statistical plays. In this case, we are only meeting halfway of it. So it's halfway, meaning that the bulls, which is DMI plus, aka this green line here, that has actually shown that we've crossed upside of the bears, or aka it's the minus, right? So that DMI minus is actually below us. The DMI plus is above, but what I usually would require is actually the average directional index here to be pivoted at least at about 20% or 25%, and it's with an upside pivot, which is good, but it's at 11.3%. So it's half the signal. Okay, so what I'm talking about here is that the criteria for this upside statistical move is, as far as the signal being fired, I would say that it is at about 90% signal fired. Okay, so that's how can I say this? If you have a 1,300 horsepower car, right, and and one of the coils or one of the spark plugs are actually starting to misfire just a little bit, it's not like the car is going to break down, right? In fact, it's gonna hinder a little bit of its performance, but it's still not going to be as powerful as it would be full blown, right? So that's kind of what I'm looking at here. It's like we have it all except for this like one missing spark plug here. It's just it's kind of misfiring here. It's whatever needs to happen is just I don't know, right? But it's just that's a condition here that is not quite meeting. It's meeting only half of it, right? We need that DMI plus up there, and we need that ADX. So, guys, I'm sorry that if you've been hearing that blowing noise in the background, that's actually my AC unit that I had to pull out, right? I had to reinstall it here in the studio, an independent AC unit, so that I don't strain the central unit out, for the primary system of the house, because it was 107 degrees out today, right? And it's going to be very hot tomorrow too. So I figured that this would be a better way to kind of conserve some energy, right, and not putting all that strain on the central units, as we're leaving those at about 77 or 78 degrees. Still a little bit warm up there, right? But still, right, we don't want to get flagged, and we also don't want to create some type of power outage. So I apologize about that, okay, team? But yeah, like I said, team, that's kind of like what's happening here, and it was very important for me to kind of touch bases with you there. Immediate short-term time frame, we definitely have some upside here, and it's particular to the 30-minute time frame here, right? It's showing an upside pivot in the gravitational zone of the bear weakness, very likely to get pushed to the upside. Support being found here on the bi-hourly, right? This is very likely to find that support from both the SMA 14, represented by the pink line, and the gravitational zone here of the bear weakness percentile. Okay, so the 4-hour time frame, if you look here, this could actually be the support touch of the SMA 14 before a rejection and continuation to the upside. Same situation here on the 8-hour. It's about to find support from that SMA 14, giving validity to the shorter time frames. And let's see here, a little bit of consolidation on the daily, 3-day, and 5-day. What that's telling me is that the upper time frames are actually waiting for the influence from the shorter time frames, and it is respectably that's honestly how it happens, right? We need to actually cascade into time frames, right? So 30 to the hourly, bi-hourly to the 4-hour, 6-hour, 6-hour into the 8-hour, 12-hour, and daily into the 3 and 5. So 3 and 5 days. Right, so that's usually how I tend to look at momentum, team. So everything's looking good. We're just waiting for this absolute breakout here, right? So we may actually face a little bit of resistance, following up at about 467 come Monday, short-term time frame, right? And potential little pullback back to around 446. Hopefully, we can actually start getting that break upside of this wedge here. Now, best case scenario would actually be to where we make a short-term upside to meet the first target, right? That would be at about 602. Retrace back to the current price action here at about 443 to around 460. Validate the newly converted resistance into now support, and then continue on to the upside, thus meeting the average mean, the average upside thrust of about 91.78% to the upside. Okay, so all those things are very conditional. Remember, team, we are looking at absolute statistics here. They are not certainties. And please remember, team, that I am not a financial advisor. I'm not sure if I said it, but I have to say it again. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your weekend, and hopefully a long one. And I will catch you at the bell mañana for a short session. Remember, team, adios.